Right, fam. Welcome to this next module of the Elektronfx cryptocurrency bootcamp. Right, that the Next Dollar Millionaire. All right, we've already had some sessions already, and this is like a build-up because I know that most of you are already familiar with this. All right, so it's not wise I come and start teaching something that you already know. All right, so I don't want to be teaching this like um during the main session, right? I just want you to review this. And then for those of you that are new to it, then you can use this as a building block for what we'll be talking about in the next video, all right, or in the next class, right? So this is an introduction to technical analysis, right? So when it comes to cryptocurrency, there is something we call market structure. And that is something that whether you're investing, if listen to me carefully, whether you're investing or you are trading, you must have an understanding of technical analysis. Like, it's not wise that you just come and buy a coin without knowing what it might likely do. It's not enough to just buy a coin because you heard the coin is going up. Like, for instance, look at what Bitcoin did, right? When Bitcoin was super bullish, right? People were buying, and buying Bitcoin. Look what happened. Imagine Bitcoin came to this place. Imagine that you bought Bitcoin when it was around 64, 624, right? You see that you would have lost all your money, right? When it came down to this point. Maybe if you bought 100,000 naira worth of Bitcoin or $100 worth of Bitcoin, now it would have been worth not even not close to nothing. All right. So it's not enough to know that a coin is going to go up or is going to go down. All right, you must have a technical reason to buy a coin or a fundamental reason. Also, the fundamental is also part of it, but you must have a reason to buy or sell a coin. And it's not just enough to just hear that maybe hear from your friend that a coin is going to buy, a coin is going to go up, and you just go and buy it, and then it dumps on you. And some people always say one funny thing, buy the dip. Now imagine that as Bitcoin dumped to you and you bust the dip, because what happened? They have got more deeper. You bought another dip. It became a bit high for some. You can still drop. You bought the dip. Have you seen how the dip has been going deeper? All right. So this is where technical analysis come. Not what I said. Whether you're trading cryptocurrency or whether you're going to be investing, you're going to do anything at all, you must understand technical analysis. If you want to be the next dollar millionaire, this is it. I'm giving you this for free. Understand technical analysis. And now that brings us to what? Market structure. So market structure simply means the skeletal system of the market. And the skeletal system of the market is made up of what? The charts and price levels. All right. So what do I mean by that? When I say the skeletal system of the market, I'm referring to what? The candles and the price levels. That is what makes up market structure. The candles and the price levels. Candles and price levels. That is only what makes us market structure. Right. So now, since you've understood candles and the prices make market structure, how do we interpret this? Now, when it comes to cryptocurrency, we have three kinds of market structure. We have the bullish, right, or uptrend. So we have the bullish or the uptrend markets. That means the market is doing what? Going up. If it's bullish, it's going up. As the market is going up, this is what we call a bullish market, right? The market is going up, it is bullish, all right? And then we have what we call the downtrend or what? The downtrend or bearish market, right? Downtrend or bearish market. Follow me closely, all right? So you have the downtrend or the bearish market, right? So this is the second thing that we have, right? So let me also do this a bit quickly. So you have the downtrend or the bearish market. So you're going to really learn a lot from this, right? Just follow me closely. This video will not be long, so that you will not um get bored, or some people have a lot of kind of short attention span, all of that, right? So now we have the bullish or downtrend market, and then the final kind of market that we have, all right? It's what we call the range or consolidation, right? Range or consolidation or consolidation. This is what we basically have, the range or what? The consolidation, right? So now, since you have understood this, these are the three kinds of market structure that we have based on the candlesticks and the price level, or yeah, the candle and the price levels. We have these three, just these three, the basic kinds of market structure that we have. All right. Although we have choppy markets, but I won't talk about choppy markets, right? Because it's not something that you should be looking to trade. All right. So now let us start with what? The range or let's start with the bullish market instead, just as it's listed. So now we have understood that we have this. So let's that was the bullish or uptrend market. Now, when the market is bullish, what should you find in the bullish market? It's basically two things you want to find in a bullish market: a higher high and a higher low. That is what makes up a bullish market. All right. So now what does it look like? Since we are bullish, it simply means that the market is doing what? Going up. And in a bullish market, you want price to do what? Be going up. You want to be what? Pumping. That's what we call by pumps. The market is what? Bullish. All right. So when the market is not doing so, a bullish market typically it looks like this. This is how a bullish market looks like. This is all it looks like. So when you see a market doing something like this, it's called what? A bullish market. So let's come here. Let's go to the 1 hour time frame. All right. So now let us see. You can see what I'm talking about. Can you see what I'm saying? Can you see what I'm just talking about? Can you see how what I'm saying is happening? Can you see this market has been was bullish? So you can see what I've told you. You can see how the market is doing what that same stuff I've been referring to. Can you see it? So I'm just showing you the reach chart. I'm just saying it has been doing what I'm talking about. Right? This is it. The same thing I just explained now. Can you see it? So the bullish market looks like on the cryptocurrency space. Right? This is Bitcoin, BTC. Can you see what I'm talking about? So it's not always picture perfect. It's just like this. So it looks like you always in the market doing something. That's what we mean by what a bullish market, right? And in this kind of market, what do you want to do? You want to be buy. You buy a price goes high. You want to buy in where the bigger move is. Can you see that? Although the market is going down and still going up, but relatively it's going what's up. If you bought here, you're in profit. If you came down a bit, you bought another game, it's up. So in a bullish market, you want to be what's buy, and this is very good for those that are sports traders. The one that are going to because you don't sell in sports, you usually buy, right? So if you're a sports trader, you want to be just be buying and taking price higher. So this is where pumps actually are advantageous. If you see a coin that is actually very good, you want to do what? Be looking like this before you buy it. All right. So you can look for this. This market is looking like this. That is when you should know what you should buy a coin or buy a cryptocurrency or buy a futures market. All right. So now this is what it looks like. It makes up high. So now where is the higher high in this market? This is the higher high. The high above the previous high. What it means? Higher than previous high. So this higher high means higher than previous high. All right. So when you see this form, so this is actually what we call a bullish market, right? Sorry. So once what do you mean by higher high? It means that this high is what higher than the previous what high. What the higher high means. So once the market make a higher than the previous high, that's a higher high. And the market does what? Make another one. That is what we call a higher high. So a higher high is simply the high that is higher than the previous what high. So that's what you should see. You want to see the market, do that. So now let's assume that the market is doing something like this. Let us be practical now. The market is something like this, right? And then this the market was bullish, and then you see that the market something like the market is here. Now, as the market is here, maybe it rejected from here and went down. Now, look at this closing. I want to understand this. Now, as this market is here, this is your higher high. This is your higher high. Now, is this a higher high? This point here, this last move up, is this a higher high? No. It has to be above the previous high to be called what? A higher high. All right? So understand that the high has to be above the previous high to be called what? A higher high. Right? So why for the down lower part is just the opposite. So it's just a low that was above the previous low, right? So higher low is higher than what previous low, right? So we have we have this as well. Can you see it? So higher than previous low, higher than previous high. That is all to see in the bullish market, right? Why for a bearish or downtrending market is just what the reverse, right? It's just the reverse. Right, so a bearish market, it is made up of what's called lower high, and what lower low, right? I will explain the essence of this very soon, right? So in a bearish market, you want to see the market was look like this. That is when the market is what bearish, all right? The market is bearish, and the topper part, the topmost part is what's called the lower high, right? This is the lower high, right? So you can just simply clone that. So we have the lower high, and then it has to be what's lower than previous high, right? If it goes above this, it's no more a lower high. It has to be what's below what the previous lower high. All right. So now the down part is what we call what the lower low, right? So we have the lower low, and then the lower low. You have lower high, lower high. This is also called a bearish or the what? A downtrending market. And where is the example of that? When Bitcoin gave that wicked dump, let's go to weekly time frame. Let us just simply go to where Bitcoin gave that wicked dump. So somewhere around there, you will find it. So this bearish run, let's go to 1 hour around there. You'll see how Bitcoin has behaving for that's lower high and lower low. Can you see it? Can you see what I'm talking about? Can you see it? So you can see that I'm talking about. You can see lower high. Can you see it's looking like on the chart? Can you see it? Right? This is what a bearish market looks like. It just looks like this. It should go like that. All right. So we have understood that. Right. So that is so now the last one was to call the range or the consolidation. Right. So this one is actually very easy. It's when the market is inside a kind of box. Right. And in this kind of box, we have two basic things. We have what they call a support and then a resistance. So a support is simply a place that bounces price off. Right. So we have what we call the support. So this is a resistance. Sorry. It's just the reverse. It's still the same thing. Just that one is up, one is down. So this is a resistance level, like your ceiling. So resistance level is like your ceiling. So price, comes and bounces off it and goes lower. Like when I see price bouncing off an area, I'm going to that's what we call a resistance level, right? Can we see a resistance level here? Yes, we can. So look at the resistance level here. Can you see how price was doing what? Bouncing off this, right? So that's a resistance level. Once you see price bouncing off a particular, that's what we call a resistance level. And note, resistance levels can be broken. And when it breaks, it becomes what? A support, right? Imagine you break your ceiling in your house. If you break it and go above, when you want to like stand on it, it's because what? A support to you, right? So support is just basically when it's lower than the price. So, support. So you have what we call a support level. So these things are better. Support level and resistance level, I don't trade it. I use only a bigger time frame, a daily time frame, all of that, right? So I have what we call the support, right? The support level. So now, what do you want to see? In the range of constellation, the market is doing what? Is in between a support and a resistance. That means it's not looking like this. It's not going higher and it's not going lower. It's just inside a range. It's just inside a box, looking like this. Market is just bouncing or bouncing down. That's what a range looks like, right? It is just inside a box. It's not going for high. It's not going low. So can I see a range? Look at a range. So you had a kind of tight range. Look at this range. Between these points, you can see that there was a resistance level there. And look at it, a support level here. You can see what we call a range. I said the market was doing what? Bouncing up, down, up, down, up, down, up, down, before finally was broke through. So you shouldn't be trying to do a 3-day range. Avoid the ranges as much as possible. Only look to trade what? Markets that look like this. All right, unless maybe you trade resistance and support, right? There are times you can trade it because imagine you bought sometimes ranges are full of manipulation, right? I don't advise you trade ranges. Wait a market to what either bullish or what bearish. Then you can do what you cannot trade it. So now we have understood the three kinds of market structure on the cryptocurrency. Now that brings to the final part of this lesson, which is called what the break of structure. So what do we mean by break of structure? So now we have understood that we have three kinds of market structure. So now I have to understand when does this market change? Does it continue being bullish forever? Will the market continue, buying forever? Will it continue? No. So that's because of what break of market structure. In a bullish market, when the market is doing what I told you guys, higher highs and higher lows. Once the market goes below here, I told you that the low must be higher than the previous low and all of that. But once the low this goes below the previous low, this is also referred to what as a break of market structure. So once this breaks the previous low, automatically this market is no more a bullish or uptrend market. It becomes what bearish. It becomes down. That means once the market breaks this low, you should expect the market to do what? To start doing what? Giving what? A bearish structure. That's what we mean. So whenever the market breaks a low, expect that uptrend to become what? A downtrend. And also reverse the downtrend. If the market is bearish, like I explained earlier, if it's bearish and you see the market go above what? The previous lower high. When this happens, we have what we call a break of market structure. And what do you expect? The market can do what? Start buying. All right. Once this happens, expect the market to do what? Start buying. Right? This is what we call a break. So this is what it looks like for a bullish. So if it's bullish, it breaks. If it's bearish, it breaks. So once you see the market break below the low, you can settle for what? Sell. It is automatically what? Bearish. Then you can bring out your what? Fibonacci tool, right? And look for sells. Right? Just bring it out. And you can only from price to come to at least 50%. All right. So let me explain this. Now, assuming that um uh okay, let me use an example. But just understand this point. I will throw more light on it in the main class. Just understand that When the market breaks below, it's what we call a bullish, a bearish was a bearish, a bearish break. So this is a bearish was break, right? The market is, why is it bearish break? Because it's no more bullish. That's gone was below the previous what low, right? The previous was higher low, and let me just denote that. So this is where the break happens at the last what, the last higher low. That's what it happens at the last higher low. Why for a bearish market, the bullish break happens at where, at the last what, lower high, all right, lower than was previous. So this is, where is the last lower high here? That's why a bullish break was occurs, and you can denote that by what, a line and arrow to denote what, your break or structure. All right. So when this happens, this market automatically becomes what, a bullish break. That means when the market does that, you should expect what price to do, what, start buying. So let's look at examples of break or structure. So now let us delete all this and see if we can find it. So now this market was what? Let's look at this. So you can see that from here, this market was what? Bearish. You can see lower high, lower low, lower high, and what? Lower low. Look what happened. This was the last lower high. You can think that this was lower than what this high. So when this lower high formed, what happened? We had what? Price break it. So when price broke it, what do we have? Are we seeing how the thing is changing? Right? From this point, market was looking like this. But the basic price went above what? This previous high. What happened? When I saw the market doing that opposite, started looking like this. Can you see it? Can you see how this thing is playing? This is what we call a clear bullish break of structure. So when you see a bullish break, wait for the market to come back down, then look for buys, right? And in this level, what can we see here? We can see that was what, a support level here. So when the market broke this high, so the market did what? It came back for this other block, which is at what, a support level. Have you seen it? Once it break the resistance, it becomes what, support. So you can see that when the market broke it, it came to the up and there. So once the market breaks, so don't just buy. Wait for the market to come down to a level, all right, to maybe an old support resistance level, an old demand supply zone, an institutional candle, and all of that. I'm not talking about IC candles now. I'm not talking about market structure, all right. So this is how it looks like. This is exactly what it looks like. This is what this thing looks like. I'm trying to see if I can see a bearish break. So I'm trying to see if I can see one that was bearish on the cryptocurrency. Let me see if I can find a bearish one. All right, can you see? Now look at this market now. Can you see? Let us see. So the market was what? Bullish. You can see high, low, high, low. This was the last higher low, right? What can we see? Is there a break? Yes. Market did what? Went below this last what? Higher low. And what happened? Market came back and did what? Can you see how the thing changed from this bullish looking structure? It's now looking like what? A bearish structure. Can you see it? Can you see how this is has reversed? Can you see how it has changed there? So this is what this is actually the basics of trading cryptocurrency market structure. All right. So in the next video, we'll talk more about this. All right. So in the next class, rather. So I want you guys to subscribe to this channel and all of that. Right. So see you guys in class tomorrow.